Mike Green, I'm here in Marin County. As you can tell by the smile on my face and my venture capital vest, I'm sitting down with my good friend, Josh Wolfe. Josh, welcome back to Real Vision.
Mike, great to see you. In honor of you wearing the vest, I have disrobed of my classic cardigan sweater.
Well, we appreciate that because I know, having seen some of the videos that you've done recently, you've been working on your guns, and we do have female viewership. There's nothing they'd rather see than Josh Wolfe disrobed. It's been almost a full year since we sat down. I know you and I had really hoped that we'd be able to do this in person. We're both sick of Zoom calls and have missed the opportunity to sit down in person. But, I wanted to actually start this off with kind of your thoughts on the technology advancement or the technology propulsion that has effectively occurred with the shutdowns, moving people into video communications. You sat down with me almost actually 3 years ago to talk about NVIDIA and what you were seeing in terms of the implications of their technology advancements. Today, we're all using that in a way that I don't think we could have ever imagined a year ago. What's going on at Lux? How are you guys behaving under these conditions? How are you seeing your companies adapt, et cetera, in this world of work from home?
I think most of this is relatively consensus. You've had 3-4 years of mass adoption that have been accelerated into a pretty short period of time. Half of our team being in New York, half of our team being in Menlo Park was already remote. So in a sense, we already had this virtual aspect for half of our team. What changed is at the micro scale, at the individual offices, people dispersed. And so we went from being, half the team to being, 100% of the team being fully dispersed. But I think we were used to that. Peter and I co-run the firm, and we're only together a few times a year when we talk, 10 times a day and are on video multiple times a week. But I feel like we didn't miss a beat there. With our companies, I think that they all communicated with each other, communicated with us, try to figure out best practices, particularly for being able to sound that resonant tonal A, beat the drum as a leader, if you're a CEO, and make sure that everybody's sort of aligned. The downside for us in assessing companies, remember, we're not strictly doing software stuff. We're doing some very sophisticated hardware technology. You're getting demos, you're seeing self-driving cars, you're watching rockets being built. You're looking at physical stuff. That was really painful. In spite of that, I will tell you that we ended up doing probably the craziest pace of deal making that we've done, which has pros and cons to it. But the very thing that I love to do in sitting with an entrepreneur is looking at, the two founders and seeing the body language, seeing the subtle tells when one makes a very bombastic, big, audacious claim, and the other one is either nodding along with conviction or gives that poker tell where they swallow. And I can read the discomfort. There's subtle cues like that are totally lost. I mean, it's truly a multidimensional mosaic that gets compressed into this two-dimensional screen. And so I really miss that. And I find that we are losing a competitive advantage of being able to read and assess people, especially when so much of what we do at that conception or inception stage is really hard to distinguish between, somebody that's visionary or totally delusional. The other thing is, we often try to be cinematic when we're winning deals, meaning we want to create a memory, a moment for that entrepreneur that they are telling their loved ones, their spouse, their parents, their family, here's how Lux came and presented the term sheet and did the deal. We want it to feel special, and we want that story to replicate so that we sort of distinguish ourselves. We've had term sheets go out after meeting an entrepreneur on a Monday, on a Friday, and we've seen a competing firm come in on Saturday morning through Zoom because the barriers to be able to compete have been, eviscerated. So that is also to our disadvantage. We found other ways to sort of make up for that. But by and large, we've put out more money this year, I think, than we have in the past two combined. The size of the checks that we're writing, the speed at which...
Hi, I'm Raoul Powell. Sorry to interrupt your video, I know it's a pain in the arse, but look, I want to tell you something important. I can tell that you really want to learn about what's going on in financial markets and understand the global economy in these complicated times. That's what we do at Real Vision. So this YouTube channel is a small fraction of what we actually do. You should really come over to realvision.com and see the 20 or so videos a week that we produce of this kind of quality of content, the deep analysis and understanding of the world around us. So if you click on the link below or go to realvision.com, it costs you $1. I don't think you can afford to be without it.
Sort of make up for that. But by and large, we've put out more money this year, I think, than we have in the past two combined. The size of the checks that we're writing, the speed at which we've been doing it, all of which, also makes us very concerned. But in a sense, I thought March, market had a short drawdown. I thought we were going to see illiquidity, which I've been talking about for a really long time. I thought our LPs were going to have issues. I thought other people's LPs were going to have issues. We were going to have a big opportunity for special situations. None of that happened. By May, we went into a FOMO frenzy across the board in venture, and the pace of capital formation has been truly unprecedented in our sector.
So one of the things that's driven that FOMO and that pace of unprecedented activity, I would argue, has been the special purpose acquisition companies, the SPACs.
I've heard of these things.
You've heard of those. Well, not only have you heard of them, you've done a couple, right? So Desktop Metal is a Lux deal that came public via a SPAC. You recently sold one of your businesses, I think Latch, to Tishman Speyer via another SPAC, right? What's the story for SPACs from a venture capitalist perspective? Why not do the traditional S1 prospectus filing, go through the process of an IPO? Why have SPACs become an attractive vehicle from a venture capitalist perspective?
Well, first of all, I give you credit because you were talking about this as this resurgence in structural, which I love and value deeply about you, long before this even became a thing. And you were sort of urging me, make sure that you're on top of this. This is going to become a big phenomenon. So thank you. And we've had 4 of our companies, go public at significant valuations, capture a significant amount of capital in cash and stock currency. And that gives you the fuel to be able to do some transformative deals. The number one appeal of it, of course, is the ability to really give forward guidance. I mean, that is the arbitrage of being able to actually talk to the market and talk about what you're going to do. And that, of course, invites both good actors and bad actors into the pool, because you got some people that are going to make these audacious claims that are totally full of shit. And you got other people that are making authentic claims, talking about the prospects of their business. And it will take time for that to sort out, between the SPACs and the craps. SPACs themselves, as you know, of course, this was the backwater finance. If somebody would have come to me a year and a half ago, or even a year ago, and said, hey, you should think about taking your company public with a SPAC, the people that were participating in these things were, shady operators. You would see them at these low quality B- or C- or D+, bankers, the kind of people that typically had Pitbull and Snoop Dogg, performing at their soirees. It was always a signal. It was probably more of an attractive ground for short sellers to identify candidates of companies to short than it was any signal of high quality companies to be long. And so it was, to me, a totally illegitimate area. By comparison, I was talking to Bill Conway, Carlyle founder, who helped put us in business. And I was like, there's something here that feels almost resonant with the late 80s, with the buyout boom, where you had junk bonds that was this totally illegitimate area of finance, that a combination of portfolio theory and academic theory put forth by Milken was basically like, well, wait a second, you could sort of build a venture capital-like portfolio and induced, a lot of institutional capital that ended up creating enormous businesses. Bill said, actually, there's a lot of similarities here, except many of those businesses were legitimately good businesses that were generating cash flow. And almost everything that's happening in the SPAC world, including a lot of our companies, are still profit-losing, unprofitable, money-losing businesses that have very large TAMs and very high growth rates. And at the moment, that is being valued above all else.
So it's interesting. I mean, the reason I drew your attention to SPACs is because my view is that they're actually a structural phenomenon, right? What is actually happening with SPACs is it is a component of index arbitrage similar to the inclusion of Tesla into the S&P 500. If you look at the methodology for the larger indices like a Vanguard Total Market Index, a SPAC takes advantage of a feature of that. So a SPAC is a blank check acquisition company, right? It is capitalized effectively as a zero coupon bond, non-operating. You as the sponsor are guaranteed, or as a participant are guaranteed to at minimum get your money back, right? So you invest $1,000, you're going to get $1,000 back, and you will receive the option to decide to participate in the purchase of a operating entity, right? When issued, therefore, they trade like a cash instrument, right? What is the yield effectively to maturity that is represented by the time of the SPAC that exists? And then the second phenomenon that occurs is once they make an operating acquisition or identify an operating acquisition, you get to place that vote, right? The interesting feature is that while they are cash vehicles, they are not eligible for index inclusion in a Vanguard type index. But once they make the operating acquisition, if it is a size acquisition of a certain threshold, then it hits what is called fast track IPO status. And instead of having to wait 6 to 12 months for inclusion, as you would for a normal IPO, which creates the buying pressure from the Vanguards, et cetera, it becomes eligible in as few as 5 days, right? And so what I would suggest that we're seeing is just a variant of what we saw with Tesla, right? Where $70 billion of Tesla needed to be purchased basically between September of 2020 and December of 2020, which in the presence of an inelastic group of holders, those who are not willing to sell on an increase in price, those could be passive, those could be Cathie Wood at ARK, et cetera, prices have to rise until they achieve a level that requires that. And perversely, as the prices rise, even more needs to be bought, right? So when you have a SPAC that makes $1 billion acquisition, functionally, it means that Vanguard is going to have to step in 5 to 10 days and buy $70 million to $100 million of that illiquid vehicle, propelling the price higher. And we're just seeing this over and over and over again. Effectively, what I think is occurring is a transfer mechanism from private equity and venture capital players. They are receiving the funds from Vanguard investors without the Vanguard investors really having any idea what they're doing. They don't think they are not aware of this methodology dynamic. So I think that's what's actually happening. And I think, unfortunately, a narrative is built up around it that this is superior, that it allows you to give forward guidance. I mean, the reality is you may think forward guidance matters, but, you and I both know that the easiest way to tell if a management team is lying is if their lips are moving, right? So it is not always true of every company, but it is very unlikely to me that idea of forward guidance is accomplishing anything particularly significant.
Well, first of all, I'm shocked because I thought that this entire thing, was just my pure genius. We of course
we both know that's prodigious, but not the driver here. Yes,
correct. But we've spoken privately about this, and you have tuned me into the structural aspect of almost necessitated, arguably algorithmic passive buying, and in an already illiquid small float name. The forward guidance is relevant only in so much as the PIPE participants. And I actually think that's going to be a distinguishing characteristic between the winners and the losers, between the SPACs and the craps over time. When you have people like D1 and Viking and Coatue and Tiger and others that I think are of higher quality, more discriminating, traditionally long short, which I would distinguish from a Cathie Wood, ARK, that are almost thematic, promoters of a asset class. I think that the forward guidance lets them look and say, legally, what is this business going to look like in 4 or 5 years, which management can never talk about if you were just filing a traditional S1 and doing an IPO. There's another structural piece, which I know you know as well, which is on the front end of this. And so the ability, we have a SPAC as well, right? And focused on health and tech. We took the team from Oris, which I think we probably first revealed together on Real Vision, that we sold to J&J for $6 billion and said, let's put some incredible people and let them go and find another target. But on the front end, the Millennium Citadels, dozens of firms are basically buying into the SPACs, as you noted, for the cash yield piece, getting 10-to-1 leverage in large part from Canadian banks. So on the front end, you have this levered trade for cash yield, getting a SPAC unit and or warrant, letting them get their money back. And then depending if they get a sense that there's momentum behind the deal, they might hold it and trades up and maybe they're, parlaying it. And then you go into this other structural issue, which is the total market funds that are these almost mandatory buyers of this. So I think going back to what we talked about a long time ago as a venture guy who's focused on an entrepreneur, technology, or thematic trend, I've always said that, it's like picking the best dish on a menu in a restaurant, having picked the best city inside the best state, and then all of a sudden Godzilla comes and steps on you. That ignorance of macro is no virtue. And so I really appreciate having these conversations because I go back to my team and I say, guys, I know we think we're geniuses right now. And every conversation that we're having in every Monday and Thursday partner meetings is all about this company just got a higher price term sheet and this company is being approached by a SPAC and they're getting more money. And it's all good news. The history of our firm is not about all good news. It's about, oh my God, how do we get the CEO out of here? They're just a disaster and there's a coup, to undermine him or her. How do we capitalize this business? We got a down round here. We got to sell this off. We have no bad news across the portfolio, which to me portends bad news coming. It's like when you're a kid, you're quiet, you got little kids and they're quiet. That's not good.
Yeah, no, it's, I think that's actually a really profound observation. It speaks to the quality of the process that you have, that your mind, your spidey sense effectively is tingling and saying, hey, wait a second, I'm not this good, right? And I think that's going to end up proving very important. But
I've actually told people right now, the most important thing that you can do right now, aside from, most of the calls are, talking to bankers, talking to SPAC sponsors, talking to PIPE participants, and really trying to make sure that our companies have the right people that are capitalizing for the long term. And regardless of what the stocks do, and this is the second thing we tell people because they're coming into enormous wealth. Entrepreneurs that are seeing their companies go between $1 and $5 billion and owning between 10 and 20% of it, it's very serious money for them. Don't focus on stock price because this thing might go 10x from here. It might go 1/10 from here. You might see an 80% or 90% decline in your stock price. The only thing you can control is the fundamentals. The one big difference this time, which is always, of course, a dangerous thing, this time is different, is the amount of cash that's being delivered to these balance sheets. It's not like these $50, $75, $100 million IPOs of 20 years ago. Our companies are getting $500, $600 million of cash. Now, unless they do a ridiculous, Kozlowski-like move where they're throwing parties with, ice statues pissing vodka, they are in a really good place. And that cash and that stock currency is going to be used not only to fuel their own business, but to think really strategically about acquisitions that they can make.
I think that speaks to your dynamic that you refer to SPACs versus craps, right? And so there's going to be any number of management teams when they have the incentive to conserve that has been removed, right? I mean, you and I talk about this all the time. Necessity is the mother of invention, right? If you are starved for cash, you're going to figure out effective ways to use cash. If you are bathing in cash, you are going to figure out ways to scrub every part of your body with it, right?
Unless you have some great board members that are lashing you, saying
correct.
This mistake has been made, do not make it, you will regret it.
I hope that's the case. I mean, I think one of the challenges once they become public is, again, once the Vanguards, BlackRocks, et cetera, of the world become their majority shareholders, your influence is diminished significantly. And so I'm very concerned that we're entering a period of, you use Dennis Kozlowski, right? We're entering a period of effectively gross corporate leadership, right? Where they are increasingly separated and disenfranchised from their shareholders. I hope I'm wrong on that, but that would be the core of my point. Now, one of the other phenomena that's happening in SPACs, and you and I chatted about this a little bit in the past, is you made a prediction that there would be dedicated pools of capital coming into this sort of space. All right. What
Yes.
does that mean? Just describe what that means.
Well, think about this. You get a bunch of SPACs. If you accept the premise, and even people talking about, not all SPACs are created equally, and maybe 10% of things are good. There's a famous thing from sci-fi, Sturgeon's Law. And Theodore Sturgeon said, 90% of all sci-fi that's written is crap. Okay, well, that extends to pretty much everything. Probably 90% of the people are crap. 90% of the music you listen to, 90% of the shows on Netflix, and certainly 90% of the SPACs are crap. So that makes an argument, a raison d'etre, for a fund to say, wait a second, there's an opportunity here for us to be a discriminating selector of SPACs. And we can go to the masses who don't know the difference and pitch them a product. Sure enough, in the past 6 months, there were 3 funds that formed to be dedicated pools of new issue SPAC buyers. What ends up happening next? These are low quality, not widely known, not branded firms. They were opportunists, but the opportunists create a signal and a proof point of demand from the market for the branded firms to come in and say, wait a second, these guys raised $500 million. We could raise a $5 billion fund. And sure enough, the pool of capital, the capital formation is going to increase. Now you have a positive feedback effect, okay? Created a legitimate reason for discriminating funds to pick winners versus losers. But now it becomes an asset gathering thing. What's going to happen? They're all going to fuel, whether it's the same concentrated names, and hopefully they're all, our best companies, but you're going to see a rise of this market that will go on longer than it should. And I think that will lead to other arguably predictable consequences in M&A and maybe even an event that leads to the ringing of the bell of when we're really at the top.
So you mentioned this dynamic of M&A. I mean, again, SPACs are interesting because they're not a traditional venture capital investment. They're not a traditional IPO, right? What you're doing is you're taking a public company and buying a private company. So M&A can take the form of public companies buying other public companies buying private companies, which SPAC is a subset of. When you talk about an M&A boom, what does that look like in your mind? What does that mean?
So when we as VCs, the one thing we can control is our entry price, and then we're focused on our exit. And classically, you're either taking a company public, which is selling your shares to other public market shareholders, or you're selling it to one shareholder and acquiring companies. When we had Control Labs, which was the brain machine interface, we sold that to Facebook. Against my preference, that was a sale to Zuck effectively. Of course, it was the Facebook shareholders, but it was one shareholder, Facebook. The discrimination of boardrooms when you are making an M&A decision is generally pretty high. You have bankers coming in, they're making a justification of what the market's going to take. You're looking at whether it's accretive or not, to your bottom line. You're making a justification. You're looking at alternatives and opportunity costs. So if you are a legitimate business that has had a good track record of M&A, by which I mean you're disciplined, you make good acquisitions, you have a reputation for making good acquisitions, all of a sudden you see a bunch of players in your sector, upstarts, going public. And you might have bought that business at $200 or $300 million, but it just went public at $1.5 billion. And you sit there in your boardroom and you're like, this is crazy. And you're right. And then it happens again to another company. You're like, man, this is really crazy. And it happens again and again. And before you know it, you say, wait a second, guys, if we don't buy some of these businesses, they're going to capitalize. They're going to attract talent. They're going to get our customers. They might even combine and consolidate and do a merger amongst themselves. And they might start buying some of our businesses. And we would be looking at this as a disciplined, I'm playing the role of a disciplined M&A investor, and say, oh, I can't buy this for more than 10 times earnings, let alone 10 times revenue. This company just bought that other little company, meaning this SPAC just bought this other little company for 30 times revenue. They could spend 15 and it would be accretive to them. So I think you're going to have a decline in the discipline of boardrooms that is going to open up the spigot of people saying, oh my God, if we don't become less disciplined and do these deals, we're going to make some real strategic errors of omission. And so they'll make an error of commission on the price they pay, which will be too high, to avoid it going to a competitor. And you will see a frenzy of buying with arguably, as you see today, a frenzy of buying in the public market of indiscriminate valuation.
So one of the things that ultimately limits that is for a corporation, they either have to issue their own shares, right? Or so the dilution dynamic, or they have to issue debt to make the acquisition, acquire something for cash, right? When you issue the debt, there's a component of the cash flow. And I think that first of all, I agree with the mechanism that you describe. And I think it's always important for people to recognize that what you were referring to at the very start, right? Suddenly well-funded competitors emerging that have $500 million sitting in the bank, particularly if those businesses have an incentive to try to gain market share, that is going to permanently impair the business, or for an extended period of time, impair the business of the publicly traded competitor, of the traditional competitor in the space. It has a perverse dynamic when we talk about this sort of reflexivity, which is what this really is in markets, where the currently publicly traded businesses actually, or current dominant businesses, could very much be under threat. And so they are forced into the M&A boom that you describe to defend themselves, right? It does create all sorts of bad behavior, but all of it contributes to the same dynamic that you and I are both referring to, which is this function of feeding frenzy.
Let me give you a very quick anecdote.
Yeah.
Desktop Metal went public, $2.5 billion valuation, since doubled, $5.3 billion valuation. Already did its first acquisition. Okay, they got $575 million between the PIPE and the SPAC delivered to the balance sheet, which is amazing. And they have stock currency, and they bought a business for $300 million. Okay, and I would suspect it's not going to be the first and last. And so, if you're one of the other 3D printing or additive manufacturing or digital manufacturing companies, you're looking at that. And sure enough, within very short order of Desktop Metal buying a company, you saw Proto Labs buy another company. And so it's going to create this competitive fervor of a sense of scarcity that the targets are going to be bought by one of these other groups because they have the cash or stock currency. That's going to, just sort of, like I said, create this M&A frenzy.
So I remember an article in, I think it was January or February of 2000 in Forbes magazine that was describing the dynamics of IPOs funding new competitors to traditional businesses. And this is one of the arguments that was behind the new economy, old economy arguments at the time, right? So if you remember the supply chain companies like Commerce One, et cetera, right? The arguments were that they were becoming so well-funded, they were becoming so rich with cash that they had this high-priced currency that allowed them to make these acquisitions, that they represented very real threats to the traditional players in that space, the W.W. Grangers, et cetera, of the world, right? That they were effectively going to be able to destroy them because of these dynamics. Now, of course, the lack of discipline that emerged on the back of that, and I have no idea whether this will happen in Desktop Metal. With your guidance, I would certainly hope that it's not the case. But, when they are operating in this regime of surplus and a high-priced stock, it becomes extraordinarily easy to assume that this is going to continue. And unfortunately, it leads to potentially very adverse capital allocation decisions that, one bad acquisition can unwind the entire story. You and I have talked about kind of that penultimate one, right? AOL-Time Warner in 2000, for example, January of 2000. Your sense is effectively that something like that is going to occur to mark the top.
I feel it is imminent. I feel that there will be a high flying, very sexy, buzzed about company with very high stock currency and very low fundamental quality, meaning, no cash flow, burning money. The only thing that they've really sold is, excessively stock. And they will buy a legitimate business that is unsexy, that is more value oriented, that has cash flow, that has distribution channels, that's got good management, frankly, that is sitting there being like, my God, what is happening? And that AOL-Time Warner, little did people know, it rang the bell. I mean, 8 weeks later, we were in March of 2000, and, the collapse, down 70, 80% in the ensuing 2 years, 90% in some of the others, was imminent. So I history doesn't repeat, it rhymes, but can we find an example of that? You and I have talked about an automaker. Could it be Tesla? Could it be a media company? I would look at who is high flying that people are scratching their head at. And in a sense, it's not quite a bailout, but it's, wait a second, here's this company with super low cost of capital. And here's this business that's actually well run. And if these things come together in the short term, it may make a lot of sense, and the story will say so. But almost invariably, these things end up being colossal economic value destroying deals. And they are signals that the bell is ringing at the top.
Yeah, I mean, we've talked about this, right? I mean, why wouldn't Tesla, since we're talking about low quality, marketing stock effectively companies, my apologies to all the Tesla fans out there, why wouldn't they acquire General Motors, right? Why wouldn't they acquire BMW, Volkswagen, et cetera?
Elon has floated the idea publicly, right? I think he said either in an interview or on Twitter, we would be open to, and I don't remember if he said merging, which would imply some weakness, or acquiring, which would imply strength, a major automaker. Okay. You and I think, both know the most likely reason why he hasn't made a move. Why do you think?
Well, I mean, from my standpoint, it would open up a true inspection of his books, right? And I think it creates the dynamic that could presage an unwinding, but it doesn't have to, right? I mean, he could actually pull this off. I'm surprised, candidly, that he hasn't tried to go, quote unquote, hostile, right? I mean, the narrative would be very straightforward. We want their facilities. We need to expand capacity. They don't know what they're doing, as evidenced by the fact that their stock prices languish while mine has exploded, and create the conditions under which it is perceived that everything you highlighted, where a story stock with a dubious management team is flipped on its head and the price of that story stock is used as justification for this is a superior management team and therefore should be able to take over a existing company, right? I think there's so much animosity towards Elon in the auto industry at this point, right? I mean, remember he's had failed partnerships with basically every company that's out there, that he's unlikely to be able to pull it off without going hostile. But I would be surprised if he doesn't, at some point, he doesn't try.
I think the trial balloon has been floated. I think it has to be a situation where it feels imminent that whoever it is, both management and shareholders, are going to be entirely complicit and along for the ride. You had lawsuits from the Solar City, acquisition, and I think that they would have to figure this out in a way that Elon retains total control. He has control over the shareholder base today. It's a big risk, to your point. I mean, being able to control the audience is one thing, and he is really exceptional at that. Being able to control an audit that would raise significant public red flags above and beyond what they've been able to show, is a different kind of risk. So it would be the poster child to me in this era, but it could come out of left field, as the GameStop stuff did, and it's an entirely different sector and a different player. But there will be some combination of a frenzy in M&A at a small scale, comparably, and some monster headline print 100 billion plus merger in a field that isn't pharma or biotech, and it'll signal we're near the end.
Yeah, I mean, I would be hopeful that regulators would wake up to the SPAC phenomenon and some of the dynamics that, the passive phenomenon, but I in all honesty, I don't expect it. Right, it is, particularly with a change of administration and everything else, it becomes really challenging.
Regulators will at some point, but the point comes after everybody's lost money and
the outcry demands it.
Yeah, but it's never a priority. They never want to be blamed for it.
No, nobody wants to be blamed for it. I think that's exactly correct. I did another a Real Vision interview with Louis Gave where I referred to the CYA phenomenon effectively, right? Nobody wants to be the person that is blamed for popping the bubble, even though they all want to prevent the bubble from inflating as it's in process, right? They are aware of the risk, but they don't know what to do.
I would put significant money with high odds that in the next 4 years, I'm giving myself a reasonable margin of safety here. I'm assuming maybe we're in 96. We got 4 years to March 2000. Maybe we're in, late winter of 99. I don't know. But high probability, regulators will come in post facto. One or more of the accounting firms will go down. Okay, it happened right under their nose. They will find some group. They'll throw them, to the wolves. Just like Anderson, it'll rebrand. There'll be some massive public legislature akin to like a Sarbanes-Oxley post facto that will be completely irrelevant. This is really predictable, but a priori, there are no sheriffs, there are no police other than skeptics and short sellers and honest press that are willing to say, wait a second, something shady is happening here.
Yeah, I mean, my discussion with our mutual friend, Jim Chanos, we highlighted this dynamic that this is the golden age of fraud, and people genuinely don't understand, or generally don't understand the process of audit, right? It's not a forensic audit. It's not the same thing as in hindsight trying to go through and figure out how people were deceived or how people got robbed of their incomes. What you're actually looking for is there a reasonable explanation from the management team in terms of what transaction occurred where, and you're just making sure that the accounts balance, right? I mean, if you go in and you lie to your tax accountant, you're going to be able to get him to produce documents for you, but you're ultimately going to be subject to the challenges of the IRS, right? When that audit occurs. But we're a long way away from that.
It's always the autopsy.
Yes.
It's never the examination.
Correct. That's exactly right. So you hit on short sellers, and you hit on, the role that they play in providing discipline to the system, but we're watching short sellers get blown up, right? And people are celebrating it. Can we talk about the social mood, what you're seeing outside of the rarefied world that you and I are very fortunate to participate in? If we take a step and look at the rest of America, I would suggest that we have this perverse dynamic where markets are at all-time highs, and yet we have a subset of our society storming the Capitol and expressing extraordinary frustration at feeling that their voice is gone in an election, whether it was true or not. And obviously, I want to emphasize, I do not think that we had massive electoral fraud, et cetera, that justified those behaviors. But I do think that people have been inflamed in that manner. But we're seeing not just that, we're also seeing the same memes present themselves in Wall Street Bets. We're seeing the same memes present themselves in Antifa, which is now increasingly coming out in an anti-Biden framework, right? I mean, it's a let's let the world burn format. What do you think is going on? What's your read on, is there a unifying factor between these various movements that we're seeing?
It's easy to connect the narrative, and I can make the case, obviously, like you have a populist movement. It's easier because of technology to coordinate and communicate and plan and make a move on the Capitol, and then quite literally by hominem make a move on capital markets. And it started in the same way, like QAnon started as like a ridiculous meme, and this thing took off. It became actually a cult. In a funny, self-aware way, WSB, Wall Street Bets, and Reddit is a little cult. People don't necessarily know each other. There's a common spirit, a common bond. But you've had this democratization of everything from access to fractional shares, Robinhood, margin accounts upon opening, The fact that pandemic put people at home and they weren't gambling on sports. As sports was canceling, they started gambling on the stock market. And the fact that you get the positive social proof and the positive personal feedback that it's working, right? I mean, you buy anything, it goes up and people are rallying and you're part of this thing and it feels really good. It feels like you're it literally feels like arena sport, like blood sport. You're in the arena, everybody's cheering together, you're slaying the big guys. I could just as easily have seen a narrative take off that said, we're long the human ingenuity trade. My God, never bet against, technology and progress. It's amazing when you think about biotech, and people are bemoaning right now how incompetent the vaccine distribution or the coordination was. And if you put it in historic perspective, we had a situation where smallpox was, first found 1500 BC. Fast forward 3,500 years to 1980, 3,500 years, it's cured. Okay. HIV and AIDS, same year, 1980. Okay. Oh my God, we have a thing. 15 years later, life-saving drugs. Smallpox, 3,500 years. HIV, 15 years. Ebola, 2014, 2016. Vaccine by 2019, 4 or 5 years. And COVID, we call it COVID-19, really came on the scene Q1 2020. We have not just one, but multiple vaccines. 1 year. I mean, in the annals of human history, that's amazing. So I can make a counterfactual argument. My God, what a time to be long and loud human ingenuity and excited about our ability to command progress. And shame on anybody that is, like me, criticizing people like Elon Musk, for the nuances of potentially fraudulent accounting when they're going to Mars and all this, okay? And I could just as easily see a narrative that said, no, Wall Street Bets wasn't about sticking it to Melvin Capital and short sellers. It was about being long, great innovation. And GameStop, is a thing that they love, and video games led to NVIDIA, and NVIDIA led to AI revolution. So there. Now, do I believe that? No. Is the easier explanation, but I'm just making the point that you can come up with a factual narrative that could infect people to say, no, this isn't about sticking it to the man or like just stay at home speculators, or the same thing like when people talk about people, that are terrorists, like they're not educated. No, they're highly educated. I mean, I don't think these people are stupid. I think they're smart. I think it became a phenomenon that they were probably like, oh my God, this is actually working. It worked with Tesla when it happened, and it's working now. And I just think that it's like a giant flash mob, and how it ends. And this is the thing that sort of worries me, because I've been speculating about what the catalyst is that causes rates to rise. And the catalyst may be the speculators. It may be the Fed moving in and being like, well, okay, wait a second. We wanted to put money in people's pockets during a pandemic, and we wanted to create, but oh my God, they're taking their stimmies and they're buying tendies, right? They're taking their stimulus checks and they're getting the feedback of chicken tenders in the stock market. And these memes are crazy. We got to put an end to this. And the critics would be right to say, don't focus on, the small segment of Wall Street or whatever, like that's dominating the headlines. You got real people that are suffering in the streets that need, unemployment, and Main Street is suffering. Don't let this dominate the news cycle. And I can also see a case where the Fed is like, we got to do something about this. Capital markets are not functioning, and the pressure from significant lobby powers of banks and Wall Street that are like, this is insane, could actually cause rates to rise. And when that happened, 20 years ago, that was the beginning of the end.
Yeah. So I think the narrative around this is going to be an interesting one. I agree with you that the likely outcome of this sort of jubilance and flash mob type celebration is going to be limitations. We're actually already seeing that today, right? Where Discord has banned our Wall Street bets, and the SEC is digging in to see if there are the equivalent of stock pools that are being set up and operated. Many people on Twitter have highlighted for me that if you go into these, what you'll find is that there's bots that are being used to effectively organize these flash mobs, indicating some coordination behind it. I think one of the real challenges is if I think about the positive narrative that you gave, that feels very much like '99, right? I remember the excitement and the enthusiasm for the great new economy and world that was coming for us, right? The tone feels different this time. This is much more nihilistic. This is much more, I have no opportunity to succeed in life unless I win the lottery. And at least this lottery feels like something I have some control over.
Could be. It could be. I will say this. When we spoke a year ago or so, I was speculating about an Occupy the Fed movement.
Mm-hmm.
And I thought it was going to be, my prediction about why it was going to occur was wrong. My prediction was just like in 07, 08, when we had Occupy Wall Street post-crisis, 08, 09. And you had, the Tea Parties on one side and you had, the Occupy Wall Street on the other side. But, they were basically anti big banks and bailouts and all that. I thought we were going to have an Occupy the Fed that would be driven by Trump's populism as the stock market went down, turning on the Fed. And my prediction was that you would see the old guard buying gold and the new guard buying Bitcoin. And, you are at the center of that debate in a brilliant way that I think many don't appreciate. But now I'm revising that, having been wrong. And I think we will see an Occupy the Fed movement, and it will be driven by a backlash to the backlash of the backlash. So first backlash, you know what? Screw these companies, these guys that are short. And by the way, I think that really started with Elon, right? Elon's war against the short sellers, getting the fanboys galvanized. This is an epic struggle for the future of humanity. And these short sellers, are picayune about, my accounting, let's go get them. And it's why you see Elon and Chamath, and both have virtues about them. Okay. But it feels really dirty seeing the cheerleading, almost inciting to, siege and capturing in the same populist way that Trump did, and arguably a brilliant way, the masses of retail investors, and it will enable them to print money. I mean, Elon, by saying Signal and seeing what happened 10 days ago or 2 weeks ago, saying Etsy and seeing what happened, saying GameStop, knowing what was going to happen, single words, the power of an individual based on the ad infinitum. I know that other people know that other people know that when Elon tweets something, other people are going to buy, and creating this frenzy is an amazing concentration of power. Now, does Twitter come in and suspend Elon's account the way that they stopped Trump's account? Probably not. Jack and Elon are close friends, right? I abhor Trump. You and I don't disagree. You and I disagree about the politics. I actually think it was wrong on the freedom of speech piece. I think it's wrong to suspend Wall Street bets. I'm probably a little bit closer to you in the libertarian sense of this, of let these things happen and figure out their natural sources as opposed to trying to suppress them and censor them in some way, because the pressure and the demand is still there, and it's just going to pop up in some other way that we can't expect, and maybe a more dangerous way. It's like on-campus drinking. I remember you shut down the on-campus drinking. What happens? It goes into the basements and in the dark places, and then kids are dying, right? Because it's not happening at the bars. So all of which is to say, Occupy Fed, I think, will occur when the Fed tries to shut down this speculation. Like I said before, I was trying to figure out the catalyst for the speculation. I think the speculation is the catalyst. The Fed raises rates, tries to shake some of the money out, or they try to change some of the option rules or regulations to try to reduce that. And then these people go crazy and are like, Occupy the Fed. And then you see the crypto people pour in, and you see crypto go crazy.
Yeah, so unfortunately, as you point out, like I'm kind of stuck in the middle of a quote unquote debate. For me, it's not a debate. I'm actually just trying to spread the information around something after having done a very deep dive from a professional standpoint.
I know you have not distributed very widely your views, and I'm very eager for you to, because as I shared with somebody, I have not had my mind changed more often or more consequentially than by you when I hear and see you present empirical evidence for something that makes me stop and say, oh shit, I'm wrong. So.
Well, that's very kind of you to say. I appreciate that. And I would flip that around. It's certainly a give and take on that front. You've given me the opportunity to hit on this. And I would just suggest that the thing that worries me most about the crypto dynamics is not that people have a view that there is an exciting next world ahead of us. It's that they've adopted it under a false rubric that to me feels very coordinated, right? That it is a view that the problem is the collapse of the dollar, right? So I'm very active in public markets. I can assure you the dollar is not collapsing. It is not losing its relevance. It is not being printed out of existence, et cetera. You can disagree with how policy is being used with the flexibility that we have with the dollar and a fiat currency. But it is not an intentional debasement trying to spur inflation, et cetera. And if you listen to the narratives that exist within the crypto space, they're completely incoherent, right? On one hand, we need inflation to get rid of the debt. On the other hand, we can't possibly have inflation. We need a deflationary currency, right? It's not at all coherent. And unfortunately, I see it as aligned with many of the other narratives. My increasing assumption is that we should be less concerned about Russian or Chinese influence in our elections and increasingly concerned about how easy it is to stoke social unrest and disunion through spreading these memes, right? By giving people who are experiencing true terror and frustration and fear at not being heard, not being understood, not having the world recognize the uncertainty and pain that they are experiencing on an individual basis, that leads to the QAnons, that leads to the Antifas, that leads to the crypto community, candidly. It's what I'm seeing. And when it breaks, I agree with you. The real risk is that the storming of the Capitol building is next time done by professionals rather than relatively mentally, challenged, just in terms of mental illness. A guy running around with a buffalo hat, you got to ask yourself, is this really, the leader of a resistance movement, or is it somebody who is being manipulated? And to me, it is very clear that we are seeing increasing manipulation. If you listen to the language that is being used, we hear the exact same phrases dumped in Wokistan are being dumped in Magistan. The two are next to each other on a circle, right? It's not a spectrum in terms of they're on the other side. They're coming back again, and they're next to each other, right? They're both being driven to this point. So it's a very painful thing, and I'm doing everything I can in a positive framework to try to make people aware of the risks that exist. As you know, nobody wants to hear it, and that's fine. I understand that. All I can do is hope that a small subset of the population actually learns something in the process. And I've been encouraged by that. I'm taking a lot of heat and a lot of hate, but I'm also getting a lot of people reaching out and saying thank you. So it goes in both directions, and I'll take it when I can get it.
Well, heat and hate often follow heresy and heretics often follow truth. So we shall see.
We shall see, indeed. You mentioned our disagreements on Trump and prior disagreement that we had about China. I'll confess that my focus on Trump was never as the individual. It was always around the China issue. And I'm incredibly concerned watching the incoming Biden administration and the individuals that are being appointed to deal with the dynamic of U.S. China relations. I'm very concerned that we are engaged in something that looks a lot like the Yugoslavia War in Roman history, where the Senate was functionally bought and incapable of responding to the violations of sanctions that have been put in place by the Senate itself. I'm seeing that on the China side, but I have to confess that having watched Trump's behavior, you had an extraordinary point that you cannot lead from that position. You cannot unify from that position. I think you were very right on that. As you look forward from here, what do you see with the Biden administration, and what do you see on China? Where are you currently on those two fronts?
So, for me, for Trump, it was the mendacity, and it was the character, and it was is this somebody that I want my children to look at as a role model? And it was always definitively no. And I think psychologically it created an enormous amount of human suffering. I think half the population that I understand that supported him is in pain. Feels left behind, has lost relative status, and then the other half of the population was being intentionally targeted in a way that it created enormous human suffering that felt very unjust. Whether Biden is successful at unifying this, there's so many incentives against unification by so many people at a local and state level. There's so many people who profit from the division. And it's interesting because as you talked about, the storming of the Capitol, when you talk about the storming, of GameStop and the hedge funds, it's this us versus them tribal mentality, which is part of our species, that is so hard to transcend. It really requires humble leadership that's able to get people to find unifying themes and concepts that are bigger than themselves. The great thing that I always rail against is actually very good at that, which is religion. Religion is very good at being able to take people that are very disparate and find some unifying thing that's much bigger than themselves. I think inspiring narratives about science and technology can be, it's a little bit too complex, maybe far out there, a little less appealing in having direct consequences to people, going, sending to heaven or hell. But I think if there is a way to have more nuanced conversations, including China, I have swung like a pendulum in two ways. At first, I was very caught by the idea before you influenced me of new China and old China. New China being primarily, the Alibabas and the JDs and the rise of the technologists and scientists and the entrepreneur and the access to foreign capital and the opening up and the giant markets that were going to have scale that was unprecedented in combination with coordination from state, that would allow billions of people onto something. And old state-owned enterprises that were old, uncompetitive, propped up by debt, ghost town residential, and then you start to see the bailing out of old China by new China at the hand, not of the free market or the invisible hand, but a very clear hand of the great, Pooh Bear, of Xi. And the surveillance, the oppression, the Uyghur population, the potential influence, not just in elections and trying to undermine, peer competitors democratically, but the foundation of that great intersubjective belief system, which is our currency. That swayed me very much more into whoa, something is much more nefarious here. And I really changed my stance on that. Reports of espionage, these things happen everywhere. So it's not like pointing a finger, but I do have a slightly nuanced view and almost pine for a nuanced view from Biden administration, which is not a return to, Nixon and China, let's open up, let's, suddenly embrace this, because that will be exploited, and not a pure jingoistic saber rattling, let's shut everything down and ban every Chinese product. There is merit that Chinese products have kill switches and technological Trojan horses. But I think finding some middle ground, which is going to take a long time, but working towards a middle ground, to me feels like the way out. And I worry that if we become too absolutist, that China is a pure enemy, the virtue of that would be potential U.S. unification in the same way that we did in the 80s around Russia, having a common enemy once again. Maybe we had too much success in the 70s, 80s, and 90s as a country, and the relative collapse of communism and Soviet Union and the rise of the U.S., that suddenly people were able to turn in internecine war, and we exacerbated our differences, which then foreign powers in turn have probably exacerbated the differences between us to put us on the brink of civil war. I would like to see a more nuanced approach where we're able to be hard on economics and actually, whether we call them a currency manipulator, where we explicitly call out IP theft, whether we explicitly call out and condemn the surveillance or the human rights issues, things that we were always pussyfooting around before. We should be very stern in standing up for the principles that so many people are attracted to in that great shining beacon, on a hill that is the U.S. But I think that there should also be an appreciation of where they are as a country in terms of the mass poverty and how much has changed in 100 years, and cultural differences, that are more complicated. I think otherwise, the risk is in our own self-interest, shutting down China and Huawei and reshoring and building resilience in our manufacturing, which I think is of critical importance, both on semiconductors, in pharmaceutical manufacturing. We're part of a company called Resilience that is doing this back here on defense. I think that's all good. I think what's bad with negative consequences is China is going to develop domestic industries at a rate and pace with a level of coordination that has so evidently been lacking, as evidenced over the past 2 years of how we've dealt with so many things. And I think that's going to come back to bite us in a really big way. So unless we have national coordinated efforts to be competitive, I truly believe that you will have an ascendant China industrial scientific base like we've never seen before, that was akin to what the U.S. had coming out of World War II for the next 60 years.
So it's interesting. I think that China has a true structural disadvantage in that the need for control, what you described, is effectively a parasitic load that grows, right? So if you are constantly forced to think, is what I'm doing approved by Xi Jinping thought? It is the insight that I'm generating, does it expose me to reports by my peers who might be jealous of my advances or who might find it politically more expedient to claim that I am anti-state with my process? That's the same thing that happened in the Soviet Union, right? Ultimately, that parasitic load begins to overwhelm the coordination component. So I'm less concerned that they have that capability. I actually think the bigger risk is that in combating China, in adopting the hard stance, that we become more like them.
Let me pause on the first part, and let's go double click into the second one. If you take Soviet Union as an example, what you described, which I 100% agree with, in stifling free speech and stifling dissent and stifling, I mean, the very essence of a Popperian or a David Deutschian sense of conjecture, hypothesis, criticism. It's how science progresses. If you cannot openly conjecture, come up with hypotheses and have skepticism and doubt and profess reason, if that is suppressed, by definition, you are suppressing creativity. And if you suppress creativity, it is why, on the one hand, you never saw any great consumer products from Russia, because there was never any competition for these. There was never any great aspiring ideal. What you did see from Russia that was competitive was science and technology directed by the state and very competitive MiG fighter jets in the military. And so I would think with reasonably high probability, you're going to, exactly as you say, stifle free speech, stifle creativity. You haven't really seen, although you saw one example of great science fiction in the three body problem, 2008, 2009, translated, 5-6 years ago, you haven't seen anything else really emerge from that. That was probably at a time where suppression was not even as high as it is now. And so I think you will see stifled creativity. I think you will see more Ai Weiwei's types, artists in dissent, some of which will become very famous, almost like a Navalny in Russia, in galvanizing dissent, particularly with tools of technology. But I think you will see a very competitive scientific and technological and military apparatus at state direction.
Yeah, so this is where you and I completely agree, right? But if you think about the underlying dynamic that you're highlighting there, the lack of emergence of consumer type products, the lack of the emergence of a supporting economy around that means that subset, the defense and military aspects of it, the pure science aspects of it, become a larger and larger fraction of the economy. Effectively, the state is siphoning off more and more of the resources from an increasingly stagnant economy and creating the conditions for its own collapse. That's really the story of the Soviet Union.
That is true if it is an entirely closed system. But we have seen China reach out in its own version of statecraft and economic statecraft. Now, not necessarily in the same sort of first world countries that we're allied with, but their dependence on China. And you already saw this with 5G chips and our influence to say, no, don't take those chips, don't work with them. I think that that's only going to compound. You're going to see lots of innovations from China that China is going to get into other peer countries. And there's going to be literally a splitting of the world between U.S. allied technologies and internet and China allied technologies and internet. But I don't think like the Soviet Union, where virtually nobody other than Cuba was dependent on, the Lada, their Russian car. I think that's the one big distinction that China has done, the a priori One Belt, One Road initiative and created the distribution channels into certain countries that are going to become dependent upon China's science and technology base.
Again, I think I disagree with you on this. And I do agree that we're going to see a fracturing. I think part of the reason why you do need to be harder and more firm in breaking the two systems apart is for exactly the reasons that you said. Ultimately, any advances in consumer products that came out of the Soviet Union were a function of mimicking advances that were made in the Western markets, right? Where there were crossover points. A car makes its way into China, into Russia or the former Soviet Union. Sure, they can disaggregate it and say, okay, this is better. How does this work, et cetera? They can copy those dynamics. We've seen an extraordinary component of that already in a very open exchange where we have turned to China as the manufacturer for us, right? If you're going to stop that process and starve that military and defense beast, you ultimately have to be increasingly strident about breaking those two systems apart. The second part that you're hitting on is I completely agree with what you're saying, that the world itself is going to fracture. And I think broadly, we have a false narrative that coming out of World War II, that the US was the global superpower. We were all organized under Bretton Woods, et cetera. No, there was a dollar block, there was a ruble block, and the two were functionally split. What's happened with Xi is that he, as many will point out, he was obsessed with the dynamics of how China or how Russia, the Soviet Union broke apart under perestroika and glasnost, and effectively has decided we're going to shut that down, right? We're going to reverse that process. We're going to increase the state control. That's just reiterating or repeating the dynamics of the dismantling of Lenin's new economy into the Stalinist era, right? And so I think we're headed exactly down that path, right? We are in the annals of history in the China story, somewhere in the 1932 to 1935 type range. And again, my views on crypto are influenced by the dynamics around that. Whether that ends up being the case or not, obviously it's stochastic. It depends on the actions of the individual players in the game, but the incentive structures are functionally the same. The big difference this time around is much like, and it's not really even that big of a difference, right? Again, our allies in Europe are in a very difficult place, right? Because Europe is functionally a region of the world that is part of Eurasia. It's not truly a separate continent. It is a peninsula off of that continent that has historically been allied with the US in order to keep the Soviet Union in check. Now that it's perceived that their next door neighbor, Russia, is weakened to the point that it doesn't represent a real threat, there's very little incentive to ally with the United States. And increasingly, there's in my view, very false view that China represents a future source of aggregate demand that allows Europe to deal with its continual lack of aggregate demand tied to low population growth, aging population, et cetera. Our allies are quite simply just not our allies. And the idea that we can get them all to work together, I think we're going to need, unfortunately, what are going to feel like very catastrophic events and breaks, similar to the period of isolationism that occurred in the 1920s and early 1930s in the United States during the Great Depression, that forced them to eventually change their view, right? There's an unstable equilibrium in Eurasia.
Economically, it makes very logical sense what you were saying, that you will see an increasing affinity, magnetism out of necessity, even if it's disapproval of Europe towards Asia, specifically China. If I had to posit and speculate, one aligning exogenous shock, I do think, and there's a playbook for this already, it would be terror, Islamic terror. And I think it could be from Northern Africa and seeing the Sahel and Maghreb populated in the same way that Afghanistan and ultimately Syria have been. And to the extent that Europe and the US become re-allied, probably starting first with US and France and Mali, that you see that being a geopolitical aligned front, even while the economic front is fracturing.
Yeah, I'm hopeful that that's the case. I don't think that's going to be the flashpoint. You and I have talked about what I think will end up being the flashpoint. I'm not entirely certain that the focus will be in that manner. But we'll see. We'll see how that plays out. I think we both see the challenges here. Let's try to change it to a little bit more hopeful story, right? What are you looking at today as we start to wrap this up? What are you looking at today that you look at from a technological standpoint that just, you're like, you know what, this is going to have a huge impact. This is going to change things. And you and I both agree that it tends to be at that base layer, right? It's not, hey, look, I have a new iPhone upgrade. It's, for me, we mentioned this before, the innovations in solving the problems of protein folding, for example, in the biomedical space. That to me feels like the starting point of another gene sequencing revolution. Because proteins are ultimately the protein expressions are ultimately much more important in terms of the impact that it has on us as individuals and living organisms. React to that, and what are you seeing that I haven't seen?
I agree with you. And I have two themes that are sort of on this. They are both optimistic. I think they are going to be the basis for incredible discovery. And I actually think it really ties nicely with a lot of what we talked about pure competition, geopolitics, particularly China. One theme that connects with the protein discovery is what I would call the technologies of science. The technology of science to us means what are the tools, the instruments, the new microscopes, the new pieces of equipment that give a company, a country, competitive advantage in being able to discover things. So I can tell you that years ago, a friend of ours, Don Kenya, who is the chair and CEO of a company called FEI, which ultimately sold to Thermo Fisher for a little under $5 billion, had pioneered a microscope called the cryo-EM. And this thing was going for, a few $100,000. Suddenly demand went off the charts. They went from 100,000 or so to $1 million and then to $5 million per instrument. Universities were clamoring. If they could get one of them, all of the researchers were clamoring to just get time. And sometimes the waiting list in a single lab was up to 6 months. China had bought about a dozen of these machines and were making structural biology discovery after discovery. Structural biology leads to Nobel Prizes, whether it was the discovery of the structure of DNA or certain kinds of proteins. So you're actually, I think, very insightful in the idea that protein structure, and to the extent that it helps us fight disease and discover drugs, is a pathway. And I think the way that's going to light that pathway are going to be the instruments and tools and technologies of science. We have one company, hasn't even really been publicly talked about, that I'm extremely excited about, called ICON, EIKON. This is the work of Eric Betzig, who was a Nobel Prize winner for really developing a new technique of optics, originally inspired by seeing out into the stars. And then he realized, wait a second, I can actually use the same technique to break the diffraction limit and see below the wavelength of light into cells in real time. The layman's analogy is if you had security video footage for a 7-Eleven and you saw the store before at 7 a.m. and after at 3 p.m., and all you see in the after is that it was ransacked and disarray, you would know that it was robbed, but you have no idea who did it, what happened, what they stole, how they got in, or whatever. You have two snapshots. That's most of what we do with biology today. You put a drug in before, after, you see what happens if you're looking phenotypically at the structure of it. He is able to image inside the cell and see when you put a drug in the cell, every nanosecond, what is happening, how the molecules are distributing, how the nucleus is absorbing something, how the mitochondria are metabolizing something. It's insane. So we started a company around this with some absolutely incredible people. It's raised $85 million in their first round of funding. It's going to be a really big deal. That led to another company that we're doing with some of the same people involved for a snapshot instead of video, but at an even smaller resolution so that you can get atomic resolution of molecules relevant for drug design, particularly on the protein side. There are companies we're in like Stratios that are doing full-scale automation of labs so that a scientist could be on the beach in the Bahamas and pull up their iPad and run an experiment as though a software programmer can use AWS today, and they don't need to be in a white lab coat titrating and pouring beakers. It's all done by robots. So big theme, I think, is going to be getting behind the technologies and the instruments and the tools of science. And I think that's going to be important on a national scale competitively. I think it's going to be about productivity for some of the cutting edge scientific companies, be they biotech, pharma, drug discovery, chemistry companies. And then the other big thing, which is related and also geopolitically relevant, is space. I mean, there's such a clear analogy here. All my criticisms notwithstanding of Elon, take the railroads and everything that came about that, from real estate and land settling and commerce and communications, all of which came from taking a bunch of metal, iron, tracks, laying them down and competing about the locomotives to get to space. We are doing the same thing. Take those horizontal tracks, turn them vertically, make them disappear, put rocket boosters instead. You got SpaceX, you got Rocket Lab. There's probably a dozen other competitors. Okay, it will be competed away. Next thing that happens, you see SpaceX raising these crazy high valuations. Elon's got to justify the TAM. How does he do that? Well, we have only got $4 or $5 billion of potential revenue a year from launches, even if people are launching lots of stuff. And you got an ecosystem of companies that are launching lots of stuff. We have companies like Planet Labs that are launching small satellites to take images. You got people like Chimera that are doing communications. So you have a whole ecosystem there. But Elon says, wait a second, we need a bigger TAM. I got to do Starlink. I have to have a global communication system coming from space. So again, Chimera now, you got the antennas to be able to capture that. Chimera is going to be like the Qualcomm of space communications, okay, because of this. Then we just funded a company, us and Founders Fund, called Varda. And this is a ridiculous, crazy, far out idea, and it's real, which is zero or low gravity space manufacturing. And there's going to be certain products, starting with things like fiber optic cables, but that you would not manufacture on Earth, you would manufacture off Earth and come back here. And that comports much more with the Jeff Bezos vision of space, as opposed to the Elon vision of space, which I poo-poo. We have no reason to really go to Mars. There'll be lots of great discoveries that come as a byproduct of trying to go to Mars, no doubt. But Bezos's prospect for space is much more rational for humanity. Don't get off this planet. Let's just send our dirty, dull, disgusting industries off planet and then re-import things that have high value per kilogram, back down here. And so I would say those are the two themes: technologies of science and the instruments and tools to do it and do it better and competitively, and space generally, but the entire ecosystem that you can quite literally see vertically replicating what we did with the railroads in the late 19th century.
That sounds like you have a vision of the future that actually is quite hopeful. And so after we've had a lot of dark discussions, and there's a lot of problems that are out there that we do need to figure out how we're going to address as a society, I agree with you. I think that looking at the current environment, that the advances that are being made will likely, certainly hopefully, make our lives much richer and create the opportunity for the productivity that gives us the surplus that allows many of those who currently feel locked out to participate. I think one of the big problems that exists in things like the crypto world is this idea that you need some variant of austerity, right? That to solve the debt problems, you need to inflate it away. History does not support that, right? What we need to actually do is create the surplus that allows people to experience an improved life, even as we're generating enough productivity gains to pay down the obligations that we've incurred. And what you're describing is certainly a step in that direction. I'm incredibly excited by those topics as well. We have to do this more frequently. I really want to be able to sit down again next time in person, but if we can't, can we do 6 months, please?
You got it, man. I miss you.
I miss you too.
See you.
All the best, Josh. Thank you so much.
Peace.
Peace.
I hope you enjoyed this special episode of The Interview, the premier business and finance series in the world. However, this is just the tip of the iceberg. For more in-depth content and expert analysis, visit the membership link in the description to unlock a week's access for only $1. This dollar can change your life.